everyone, it's Jefford again from Rubik's Academy, and today we are actually going to analyze one of the more popular stocks on Wall Street, and that is Starbucks Corporation, right? We all know Starbucks, we love Starbucks. Some of us, we have to have a Starbucks in the morning, we have to have it at night, we have to have it in the afternoon, iced, hot, whatever, right? We know Starbucks, and I think it's a good day for me to analyze Starbucks Corporation, right? Because since yesterday, as of the time of this recording, S&P 500 has almost erased all its losses on March 15, right? It's already climbing back to the 3,000 level. So the thing is, what's going to happen to the rest of the stocks? And what's going to happen to a blue chip stock like Starbucks, given that the S&P 500 is recovering, right? Of course, the question of whether this recovery is real or not, we'll leave it for another day. But for today, we'll just be looking at Starbucks and whether Starbucks will recover together with S&P 500. All right, so without further ado, let's go right into today's topic. Okay, so this is Starbucks chart. All right, as you can see that this is the all-time chart. This is the all-time chart. You can see it's all-time because you know it's all-time because the unit here is 1 month. 1 M is 1 month, not 1 minute. All right, so each of these candlesticks, all right, the red, the whites, they are called candlesticks. Each of these candlesticks is 1 month in duration. So this is the all-time chart. You can see that, okay, similar to the S&P 500, which actually I wouldn't be surprised, is the fact that when it fell in March, when Starbucks price fell in March, right, it fell to a low of about $49.78. Now it has erased almost all its losses in this single candlestick. Let me just highlight it. All right. It has erased almost all its losses in that candlestick, and the corresponding candlestick and the next corresponding candlestick has already climbed back, made the price climb back to its previous level at the start of March, which is the price is $76.23. So it climbed a whopping 25%. All right. Now the thing is, with the S&P 500 continuing to recover, the question is, where is this stock going? Today I'm going to give my analysis. All right. So you can see that in terms of RSI, it's neither in the overbought or oversold zone. It's just right smack in the middle, about 50. All right, about 50 to 55. So when we see that the RSI is of such a quality, it basically means that the stock is not going anywhere. There is no bull or bear momentum. Everything is just consolidating. All right. And a similar message is given to us in terms of the ADX. You can see that previously there was this huge climb. All right. There was this huge climb. Okay, from here to here. There was this huge climb, more than 45 degrees upwards. It's a strong momentum. All right. And this was the recovery. This was the candlestick that recovered from the March low. All right. Now this recovery, the strength of this recovery trend is already waning. You can see that now instead of pointing upwards, it's pointing downwards over here. It's pointing downwards, starting downwards, meaning that the momentum is dying down. So overall, it basically means that the previous bull momentum has stopped, and the stock is just waiting, not sure where to go. It wants to go. It may go up, it may come down. We don't know. All right. But of course, based on the S&P 500, it looks like the Americans are still very hopeful about their economy. Okay, they don't see COVID-19 as a threat, long-term threat to share prices, and therefore S&P 500 is still really just rampaging upwards. Okay, now let's go to the 3-month chart. Okay, so if you can just look at the 3-month chart, you can see that the pair is basically in what we call a parallel channel, right? So let me just draw that out. All right. Okay. So the 2 yellow lines represents the 2 resistances. Okay. Let me just okay, represents the two resistances. And now this particular share price is heading towards one of its resistance, which is here. Okay, and of course, at this moment, a lot of us may be tempted to short the stock because it's reaching a resistance. But is that the right thing to do? Is that the right thing to do? Okay. You can see that there is still quite a bit of distance between here and here. All right. I would advise, if you want to go for a short, you can go for a short here. All right. Move the rectangular box up. Try to price in a short at $79. All right. If at that point you can see that COVID-19 is clearly taking an impact on the S&P 500, meaning that you see the S&P 500 starting to come down. That means the share prices of the top 500 companies are coming down. All right. As of now, it's still going up. So we need to trade with the trend. The current short-term trend is that stock prices are soaring. All right. We may see a return of S&P 500 to 3,000. So I wouldn't recommend going for a short. I wouldn't recommend going in for a short of this particular stock now. Okay. If you want to go for a long, you can wait for retracement. You can wait for a retracement to its previous support level. You can wait for a retracement there to the longer rectangular box. Okay, then you do a long. All right, but either way, because my personal stance is that I feel that the current recovery of the S&P 500 is just the last vestiges of the bulls coming in to struggle for the market. I do not think that it's going to last. I think that the fundamentals have set the foundation for a long-term bear market. And S&P 500 may even go down to 1,700 or 1,800. So I do not think that I want to go for a long. That is my personal perspective, right? But at the same time, I don't want to go in for a short because as of now, S&P 500 is still going up. The current trend is still bullish for S&P 500, all right? It's erasing all its previous losses. So honestly, it's very difficult to say whether I'll go in for a long or short now. My answer is that I will stay out of the market, okay? But I'm still analyzing this stock for the people who may want to participate in the buying and selling of shares, of Starbucks shares, okay? Because maybe your stance is different from mine. Maybe your stance is that you feel that Starbucks is gonna go up, okay? You feel that this current market, the current bear is not gonna come. We are already seeing the V-shaped recovery. We have already saw the bottom of the market. Then by all means, if you want to go in for a long, this white box over here is where I recommend. That is where I recommend you. If you are net long for Starbucks, you are a buyer of Starbucks, all right? You feel that shares are going to go up, the American economy is not going to crash, then you can do a buy there. But what I want to say is this, okay? What I want to say is this. If you look at the all-time chart, if you go back to the 2008 crisis, all right? Okay. If you go back to the 2008 crisis, which was here, okay, you can see that from February 2008 all the way to about March 2009, there was a clear decline in Starbucks share price. Okay, so it's around here. All the way to here. Okay, from here all the way to here. Okay, this rectangular box is about 12 candlesticks, which is about the whole year of 2008, which was where the financial crisis reached its peak, right? So you can see that Starbucks prices went from $9 all the way to $3. It dropped by more than 60%. So if you ask me, definitely a financial crisis, a recession does affect Starbucks prices. It is not one of those food items that are immune to a recession because people still need it even in a recession. In other words, this is what I call a luxury food item. It is not a necessity food item. So what I'm trying to say is that Starbucks as a food item is still susceptible to a recession. People may choose to stop drinking Starbucks because they just don't have enough money. That is my personal view, right? If you think that a recession is not coming, if you think We have seen the worst for S&P 500, at least for the Dow Jones, for the Russell 2000. The March lows were the lowest. Fine. Then whatever I'm saying now does not apply to you. But if you are like me, you believe that the current recovery is a false front, it's a false pretense, it's a last struggle by the existing bulls, okay? Then you need to understand that Starbucks will be affected once a recession is in full swing. Once we even reach a depression, not just recession, depression, all right? So that's what I want to say. Another thing that I want to say is this. Despite S&P 500 going up, there is something else that is very interesting, okay? Let me go. Okay, you can see that despite the S&P 500 going down, gold, spot gold is still going up. This is the all-time chart. Let's go to the 3-month chart. All right. Okay, I want to just make things very clear. You can see that gold is still going up. Gold is still going up. It broke out of the channel. It's still an overall upward trend. It broke out of the channel. It dropped down to the 0.5 area. This is the area which, if you watch my previous videos, I told you guys to buy around here. Okay, and it went up. All right. So the question is, why is gold going up even when S&P 500 is going up? And if you look at gold price by retailers, it's also going up even though S&P 500 is going up. So what is the cause and effect mechanism here? What is the bigger agenda behind? What is causing these illogical movements? Because by right, gold should be going down while S&P 500 is going up. So what is causing this particular reaction? Why is gold going up and S&P 500 going up? We need to ask ourselves that question. All right. So that's it for today. Okay, these are some other websites that I recommend in terms of understanding how Starbucks work as a stock. Okay, the market rally. All right, Motley Fool is pretty good as well. All right. Okay, this article conveys to you why Starbucks shares climbed 23% in April. All right, just search why did Starbucks stock went up in April, and this article will come out. Okay, also at the same time, this is our share investor. You should come to this website to actually understand more about the company's financials. You need to subscribe, right? I'm not endorsing this product. I use this product, but it's pretty good. All right, it does tell you a lot of the statistics that you need to know for the company. All right, for example, you have gross revenue. All right, you have gross profit. All right, remember you need to add 3 zeros behind. All right, add 3 zeros behind because the chart over here is actually, let me just go to the chart over here is actually multiplied by another 1,000. Okay, so you can see over here. All right, so no, Starbucks did not just earn 5 million that year. It's 5,000 million. Okay, which is about 5 billion. All right, so all these stats are here. You just need to add 3 zeros behind. All right, all these important stats are here. Okay, it's important for all of us to understand these stats. Okay, in my lectures, right, in my courses, in my program, I will talk to you guys about which are the important stats to look out for in terms of judging whether a company is recovering soundly from a recession. Which are the important statistics to judge? Okay, so that's it for this video. I hope to see you again in the next video. All right, we'll analyze another blue chip stock. For now, these are the resources I recommend. I'll be putting these links down in the YouTube video. All right, thank you so much. Thank you.